Hey everyone, welcome back to another Stock Market Open. Well, I guess we got another day where finally the red was supposed to be over for Tesla, but no, we're going to get more red. Of course, if you haven't watched the video yesterday, Elon Musk lost his comp plan, which creates, of course, uncertainty for Tesla. Now, I actually believe it's probably a positive for Tesla because you'll end up taking pay that was promised Elon in the past and end up giving that to shareholders. Now, I do think that'll be combined with a new comp plan, something going forward into the future. But we'll see. We shall see. Yeah, to me, that I think is very, very interesting. So, what else do we have? We've got, more job cuts. We've got PayPal cutting around 2,500 jobs. This is about 9% of its workforce. Let's see how their jobs data is moving after that, or rather their stock is moving after that, because usually after we get job cuts, we get upward movement in the stock. But then again, a lot is red today. Now, yep, still red on PayPal there. And so UPS dropped on earnings after they cut about 12,000 jobs. And now you've got PayPal cutting around, it looks like 2,500 jobs here. So we're still watching for more layoffs to come in. I like going over to, I'll get my favorite layoff website here, layoff. And we'll check out the layoff tracker just to keep an eye on what's going on. Yeah, there we go. Look at this. So as you can see here, January is starting to look a whole lot like what we had at the beginning of last year. So you had some peace and quiet when it comes to no layoffs there for a while between June, fewer layoffs there. Between June and August, summer was pretty good. Got some more layoffs there after the summer selling season in October, but otherwise relatively benign in sort of jobs data. But we wonder if this January is just the end of seasonality again, or potentially the start of, unfortunately, some form of a new trend. So we shall see. The next thing that we want to pay attention to this morning is this tentative negotiated deal between Israel and Hamas. This is a big deal. There's been a lot of talk about a deal being negotiated. Deal was talked about for a while here between Israel and Hamas, and looking at potentially finally being set with a deal. Now looking at what's being talked about, a 3-stage deal where more hostages could be freed and there could be a ceasefire for a period of time. This deal could be completed within the next week to 10 days. They've been in negotiations that have been called constructive for the last few weeks. And during the first phase, Israel would essentially stop all military operations, including drone flyovers, which I thought was very interesting, while Hamas basically groups together hostages. And so I thought that's actually very interesting that the idea is that you would also stop surveillance. I'm sure satellites will step right in. But anyway, a second phase would then step in with Hamas allowing female soldiers, female Israeli soldiers who were captured, to be freed. And then in the third phase of the ceasefire, Hamas would end up releasing male soldiers and unfortunately the bodies of dead hostages. So TBD after that. But those are some 3 phases that are being negotiated right now. Boy, I just have to say, I didn't think any of this tension in the Middle East would last as long as it has, but this has gone on for quite a while after the October attacks. So it's terrible because it's just more more death. Here I am thinking about joblessness again, but terrible. So okay, good. Then we have today. So A big deal, obviously, on Friday is going to be the jobs report. The biggest deal today is going to be your Fed meeting, your Fed FOMC. We do also have the ADP release. I've got the press release here. We'll go through this in just a moment. Usually what we're looking for here is a continued trend down in wages rotating up, as well as just the quantity that we're getting. We did miss by about 20,000 on these estimates here for the ADP employment report. Let's listen to it for a moment, what he's yapping about.
Your note yields were 43 basis points higher than they are now, while 10-year note yields were only about 18 basis points higher. There's been a lot of moves, pretty much lower, since the Fed telegraphed rate cuts for 24. Mike, back to you.
Yeah, Rick's been...
ECI, by the way, is one of the Fed's most preferred wage gain estimates. They're really big. Hold on, what's this?
Plans for the upcoming quarter. The agency plans to auction $121 billion beginning next week. They'll be refunding $105 billion and raising almost $16 billion. Now, they will be gradually increasing those auction sizes for the February through June period, but officials say that this should be the last quarter that they will need to keep increasing. Treasury officials say they should be, quote, well positioned after April to address changes to the fiscal outlook without further increases. As for the breakdown in tenors, they're going to be leaning a little bit more on the shorter term notes once again. We'll see a $3 billion monthly increase for the 2-year and the 5-year, a $2 billion increase for the 3-year, and $1 billion for the 7-year each month. Now, the $121 billion overall is an increase from last quarter, but it's in line with estimates. So unlike previous quarters, this shouldn't come as a major surprise. The emphasis on the shorter end of the curve, you know, some analysts thought we might have seen more rebalancing there, but Treasury officials, at least according to the analysts I spoke with, don't want to put too much pressure on those longer dated bonds. Now, guys, you know, you and I both know this used to be a very obscure release, but in previous quarters, it sparked a rout and then a rally. We'll see how markets react today.
All right. Look, again, the Treasury supply figures are very important, mostly for folks who want to buy Treasury bonds. They don't want to be diluted as much. So the less issuance we get from the Treasury to fund their deficit spending, the better. The impression is for buying bonds. We are sitting at down about 5.2 basis points here on the 10-year, and the 2 years down about 7.4. On Fed Day, this is very normal. It's very normal on Fed Day, usually in the 3 days after Fed Day, to see potentially as much of a 60 basis point decline in Treasury yield. So we could see a very nice droppy doodla here. So we'll take a peek here. All right, so what do we have here? Private sector employment increased by 107,000 jobs in January. This was a slight miss on the ADP report. ADP report always comes in at about 515. Annual pay was up 5.2% in January. And let's see here. So a little bit of a miss in the private report. Let's find out where. So 107,000 jobs. Looks like we've got goods producing actually up. I'm surprised construction is positive 22,000. It's pretty good. Service producing, information was negative 9,000 there. Education, leisure, hospitality, these are up. Yeah, it looks like across the board, just smaller numbers to get you to 107,000, not necessarily areas that are negative. That's good. We have been in prior ADP reports actually seen Northeast, Midwest, Southwest, some of these areas go negative, which is less ideal. All right, let's see here. Okay, then we have medium companies really showing the most job growth, with the lowest job growth around the 250 to 499 and the 20 to 49 group. Year-over-year pay gains for job stayers increased 5.2% in January, down from 5.4% in December. This has been very consistent. I would say every time we get an ADP jobs report, it's almost like down another 0.2, down another 0.2, down another 0.2. Now keep in mind, the ECI, just so you know how that's calculated, the ECI this morning came in at 0.9%. That is for a quarter. Okay? So if you annualize that, you actually end up getting 3.6%. Now, why does 3.6% matter? Well, because 3.6% is relatively close to the 3% target that the Fed has. You have to remember this. The Fed has a 3% target on labor inflation. One of the ways you can remember this is just divide consumption into this. Consumption or multiply it. Consumption represents about 70% of the economy. So if you multiply 3 by 0.7, you get roughly 2.1, which is pretty dang close to 2% inflation. This is an easy way to think about it. But the essential idea is that if wages are going up 3%, inflation's going up 2%, then real wages are going up a tiny little bit, and you're still sustaining 2% inflation while real wages actually growing. All right, so what else do we have here? Let's see here. These were the pay gains. Looks like the biggest pay gains came in construction, financial activities, education and healthcare, very government driven, and leisure and hospitality. Well, nothing too abnormal on this report. Let's see this one frequently here. And then the December number was revised down from 164 to 158. Obviously, Friday we'll get revisions as well for the labor report, the official U.S. labor report, so that'll be quite entertaining. So we'll see that. And yeah, very good. Okay, let's listen in here for a moment.
Triple shot strategy is unlocking efficiencies, and so it's
What?
us to have the confidence in reaffirming our 15 to 20% earnings growth, where we'll see growth coming from both revenue as well as the efficiencies we're unlocking through our triple shot strategy. So that's what gives us the confidence on our full guidance for the year.
You mentioned that you saw good results among your most loyal customers, maybe a little more softness on more casual visitors to shops. Is that a read-through to general consumer trends? What's your interpretation of that?
You know, we look at it as broadly, our brand remains strong across the globe. And in the quarter, we had our most loyal customers remain loyal. We did see some softness in terms of our more occasional customers, but we have robust plans in place, and we feel confident we'll be able to.
Boy, they sound so scripted. This is like, how many times did this person memorize a speech?
The performance we have, as well as the opportunities around our ability to continue to innovate, new product offerings, which we spoke about yesterday. We have a lot of good innovation in the pipeline that resonates with our customers, as evidenced in Q1, where we saw a record high ticket in the U.S. So our innovation drives a lot of our success, as well as our ability to continue to increase our digital capability, bringing more customers into our rewards program, and then continuing to open stores and provide channels of convenience. All of that helps to serve our overall business and gives us a lot of confidence that despite there are some near-term headwinds, we see an ability to be able to continue to deliver well over the long term.
Rachel, we've seen some companies coming out with lackluster results in China and others coming out and overperforming. Yeah. When you look at China, how are you able to hold on to that?
This is actually what I want to hear.
Choice that Starbucks reports to be in China for takeaway coffee.
Well, it really comes from in the market over 25. We've been in the market for over 25 years, and we've built a very durable business. We have a strong brand. We continue to be the #1 choice for our customers from away from home coffee. And what that does is that gives us a leading advantage in the premium market where we're choosing to play. And we have distinct and competitive advantages. We have 7,000 stores that are highly profitable, and they're in prime locations. And we have innovation, coffee-forward innovation that's resonating with customers. It's driving trial, it's driving consumption, and we're seeing it resonate with even a younger customer. And we're amplifying our innovation as well as our messages on social media. And so that's driving strength in our business. And we continue to believe that where we lead today is through the experience that our...
I can't handle this. This is so stupid. I'm learning nothing. I'm learning nothing from the CEO. It's literally just a stupid sales pitch. God, I hate this. At least give me some value. No, can't even answer the question about China. So dumb. Rather listen to nothing than hear that crap. Okay, so anyway, where was I? Boy, okay, well, let's look here. How about... Okay, so let's see here. Deutschland. All right, so Germany got some inflation releases here. Let's try to take a peek here. So we have German data continued the trend of slowing inflation in the euro area, supporting bets for an ECB rate cut as soon as April. Ooh, that could come right after a March cut by the Fed. We'll see what J. Powell tees up today. January prelim CPI slowed to 3.1 from 3.8 prior versus the estimate of 3.2. On a monthly basis, consumer prices slowed negative 0.2 from plus 2 prior with the negative 0.2 estimate. Wow. French inflation cooled more than expected and the lowest in 2 years, driven by slowdowns in energy, food, manufactured products. Euro area CPI projected to ease. German bonds may stall as optimism about an ECB rate cut is near peak. Well, optimism is near peak. Sure. Just got to get the cuts to start. What else? We saw the talk on CNBC about the Treasury refunding, largely as expected. No surprise there. ECI 0.9% in Q4. Talked about that. 3.6% annualized. Curve steepening today. Did see that. The 2 dropping more than the 10. Let's see. Ooh, I want to see how the dollar's been moving. We should look. Let's go with, we'll go with, let's see. U up. This is the bullish ETF on the dollar. U up is, you know, this is really since, you remember when treasuries fell and the 10-year yield was like 3.8? And then how the yield slowly snuck back up to like 4.2? I think that's the dollar strength we've been seeing. But I wouldn't be surprised that this reverses right back down. Especially once cuts really start. We shall see. Alright. Let's see, what else here? Alright. Take a peek at, estimate on, here's a little estimate on, I like this. Here's a guess on how the Fed statement will change. Yeah, how they might end up revising the statement. So they've sort of taken the words out of the Fed's mouth. I'll show this in just 1 second here. Okay, here we go. Here we go. In determining the timing and size of future adjustments to the target range for the federal funds rate, they think that's going to be the phrasing we'll see, as opposed to in determining the extent of any additional policy firming. They think this is going to be the Fed meeting where they tee up the change and they change the verbiage from the extent of additional firming to the timing and size of future adjustments to the target range for the federal funds rate. Very interesting. Okay, here's another one. Recent indicators suggest the economy or that economic activity has expanded at a strong pace in the fourth quarter, as opposed to has slowed from its strong pace in the third quarter, which is also still true. It is still slower than it was. Inflation has eased over the past year, but remains elevated. Committee remains highly attentive to inflation risk. Okay, yeah, I mean, that's very interesting. I mean, that's a pretty benign letter. I don't know how much the letter is really going to matter compared to, well, good old J. Powell. How J. Powell makes everyone feel. Yeah, all right. So, how are the sticks moving this morning? No, Google got a little whacked. Yeah. All right, here we go. Google down 5.4%. I thought it was interesting. I mean, we obviously covered the earnings yesterday, but clearly the earnings calls made little difference here. But really, their miss on operating was probably driven by that severance charge. But the fact that they did miss on advertising by 43 bips from estimates, I think is maybe starting to get people to scratch their heads like, isn't AI supposed to help Google with ads? Oh, wait, what if it hurts? Anyway, most things down here. In the chip world, you've got NVIDIA's down 2%, following AMD down 4.3%, SoFi down 3% again. Tesla's caught up in the mix thanks to the legal case. A lot of folks were wondering, well, was it really the stock comp plan yesterday? Yeah. If you just go over here, it wasn't earnings of chips. Chip earnings occurred here. And so Tesla lost maybe 0.5% during chip earnings. That wasn't what drove Tesla down. This was Tesla's drive. And this is when we started getting news about the lawsuit. In fact, I think I have an exact time. Let me see. 1:56. That was about 10 minutes behind. So the news probably came out about 4:46. Yeah, right about here. There, somewhere right around here. It's possible that it came out a little bit before I even noticed it. So I noticed it right about here. And that's when you got more of a drop. But it's possible it was already out at that point. So, yep. Okay, good. Next. NVIDIA 2, what else? Qs are down about 93 bips. And moving to the upside, we've got Plug Power, Ubiquity. I don't, but they didn't have earnings, did they? Not that I'm aware of. Let's find out. No. Alright. So I don't know if this is just some pre-market silliness. Oh well. Okay, so Plug Power 8, Starbucks. I was surprised by Starbucks. I didn't actually really like their earnings. A lot of misses where I thought it would be important that they didn't miss on estimates, and the stock's still up 4.8. But whatever. That specifically has to do with China. And maybe they're just moving up on enthusiasm on a stronger American consumer. That's possible. That'd be almost the only way I could really justify Starbucks there. Oh well.
Current crisis than his predecessor. How much do you think just withholding talking about financial objectives is because of the way it plays out in public headlines?
Yeah, I think part of it is a lot of what's happening here is unprecedented. It's hard to analyze. It's hard to predict. And so, for Boeing to take the approach, as they kind of did early with the MCAS situation on the MAX, of estimating the timelines that the FAA would come through with and when they deliver airplanes, you end up moving those targets around, changing things a lot. And it just doesn't show the proper level of respect to the process with the regulator that should be there. That's of the utmost importance right now. So the company has pivoted to that framework and philosophy, as you alluded to, and I think that's right. Boeing needs to get the product quality right. The demand for the product is really strong. The airlines want the product. They really just need to deliver it to specification. And so that's first and foremost, that's what they need to get right. So, to take that approach today, spend a few months with the FAA, with third parties in the factories, getting things 100% correct, the long term of Boeing can be really great if they can just do that.
Okay, so
Yeah, if they could just keep the bolts on, the long term of Boeing will be great. Universal Studios seems to do a better job of keeping the bolts on than Boeing. You should see. I mean, it's so sad. This weekend we went on some roller coasters on Saturday, just to, it was sort of like a little birthday weekend thing that we did. Well, mostly just birthday thing, because we were doing interviews the rest of the time. But anyway, boy, every single bolt on these roller coasters is marked. So they mark they mark on the bolt, and then they mark next to the bolt. So that way they could see if the bolt's starting to loosen at all visually. Gotta retighten and align that. Brilliant. I'm sure Boeing does that as well. But the fact that they missed bolts being there at all, mind-blowing. I don't know. It's pretty mind-blowing to me. One thing that apparently isn't clear here in the comments. Yes, today Jerome Powell speaks. It is a rate decision day. It's also coupon expiration day, if you haven't heard yet. We're going to bump some of the prices, even on the Stack Hack financial advice lectures that we've put together. You can actually get the library of that alone without having to submit your own stuff for financial advice. That's at stackhack.com, and then the other stuff over at meetkevin.com. Of course, remember live streams or whatever. That expires tonight. Okay, I've also set up the redirect link already for the Fed meeting. So that way we can have that set. I'll probably go live around 10:50. 10:50 is probably when I'll go live California time for the Fed. We will have the rate decision and press release figure that will come out right at about 11. They're usually on time. And then 11:30, J-PAL will come out today. And and these are all California time. And so at 11:30, we will cover Jerome Powell's presser. We'll get to see Nick T ask questions, for the few people who care about Nick T. Actually, a lot of people do. And then we'll see some other folks as well. It'll be entertaining. Nick T did tweet this morning, ECI is seen as the Fed, or by the Fed, as the highest quality measure of compensation growth. It's an interesting way to phrase it. I did mention as well when the data came out that this is probably the Fed's preferred wage inflation gauge. Nick T has a little bit more of an eloquent way of putting that and calls it the highest quality measure of compensation growth, and suggests that Q4 data shows the labor market continued to cool. Wages and salaries for workers excluding incentive pay slowed in Q4. His charts are great. Wages and salaries for private industry workers, excluding incentives from the prior period. You could see here 21, 22, 23. You could basically see all of 2023. You've been negative, as well as probably here towards the end of 22. And get to the next tweet that he has here. Here we go. This is the wages and salaries index, but compared to the prior year, as opposed to the read. The last one, which was a little bit more of a zigzaggy chart, was just the read of ECI. This is a comparison to last year. And so you could see that is nicely coming down. And the current annualized estimate would actually put you right about here where my mouse is. So at about 3.6 is the current annualized. And you want to be right around 3. That's the target. Very good, very good. Next. Let's see what's inside. So, let's see. Oh yeah, who reports today after the bell? Because that'll be interesting too. Oh yeah, here we go. Okay, earnings today. We've got Boeing this morning. We can see how they're doing. Novo Nordisk. They report in the AM here as well. MasterCard, also AM, so we could probably pull some of these up here. I'll start doing that right now. And then, who goes after today? Let's see here. These are all our PMs. Let's go to, or AMs rather. Okay, after hours today, we have Qualcomm, Wolfspeed, Align Tech. I thought we had some bigger names today. Not really. Qualcomm's your biggest on Fed Day here. Probably because everything's going to be caught up in Fed news. Tomorrow morning, you get Royal Caribbean, Peloton, Merck, Honeywell, 1-800-Flowers. And then, there we go. Thursday after the bell will be very interesting. Apple, Amazon, Facebook, Clorox. Who remembers Clorox during the pandemic? That was funny. Everybody wanted to buy Clorox. And because everybody was buying Clorox, people were like, that's it. Buy Clorox stock. It'll never go down. It did. MasterCard. Costs grow more than expected. Earnings beat. 3.18 adjusted Q4 versus 3.08 on the expectations. All right, let's see. I'll just write down some of the key parts. Let's see what we've got. Okay, so Q4 adjusted EPS 3.18 versus a 3.08. Looking for key things here. Purchase volumes as expected. Cross-border came in a little slower. Anything else from MasterCard? Not really. Payment volume at expectations. I'll write that down. Okay, so that was MasterCard. We'll have some fun going through some of these earnings calls and the Course Member Live and getting a little deeper into some of them. But let's quickly pull Boeing earnings. How did they get hit? I know they're up in pre-market, so must not be that bad. Boeing. Boeing pausing 737 production for 1 day to refocus on quality. Boeing adjusted free cash flow $2.95 billion versus $2.09 expected. It's pretty nice. 737 production rate 38 per month. Wow, they suspend their financial forecast. I mean, they're just going to blame uncertainty. Suspense forecast for 24. They're just going to blame uncertainty around the 737 MAX. And you can kind of rig the adjusted free cash flow there for a little bit. Boeing record logs appear to have caused confusion with repairs. Record logs. Boeing's dual record logs. Dual record logs. That'll be very interesting to see what the details are on that. Boeing dual record logs. Okay, yeah, here we go. Boeing's use of multiple record-keeping systems. Oh, man. I see this in business, too. When people use... It's like, where did you log this? Oh, it's in that platform. Wait, but we're using this one. Like, when people do that, it's terrible for documenting. May have played a role... The twin logs, one which officially tracks actions taken as the plane is put together, and another, one less formal, appeared to have led to confusion. Wow. Wow. That's nutty. Okay. Let's take a peek here, a little bit more info. So that was Boeing, MasterCard. Who else is somewhat interesting? Let's find out. Novo Nordisk actually probably would be. Let's see how their earnings came in. Novo. Not those weight loss drugs. These stocks have been like straight up. Obesity growth can be sustained even with competition. Europe's Wegovy launch will be set on volumes. Novo Nordisk sees 26% sales surge in Wegovy rollout. Wow. But the stock actually fell 4.2% after missing expectations. Too hyped up? Let's see. started increasing lower strength Wegovy in the U.S. Increasing supply, that is. Continued expansion. Okay. Yeah, the sales estimate range was about 21 to 22-ish. People were looking for 23.3. So slightly less growth here than expected. Let's take a look at how some of these are reacting. Okay, so here's Boeing's up 1.96. Novo, Nordisk up now up 2.6%. So it's recovered from that. I mean, look at the stock. It's just straight up. And really, it's been rising all of 2023 here, really. Up, 62, almost double since 2023 in Novo. Then the other one we wanted to see was MasterCard. MasterCard down about 0.5%. Little bit more flat over that, the last few years here, with the exception of a nice little pop here in starting in December. Very well.
And then suddenly we're shadowboxing with other things that are doing wrong. They are doing some layoffs. Yes, do I like how much other bets loses? No. Come on, Ruth, let's do better on that. But no, I mean, look, the stock's down because it went up a lot. I thought it was a very, very good quarter. They don't like to specify how much they made in YouTube, which does bother me. I was hoping they'd give us some granularity on the Sunday ticket. They did not. But this is still a tremendous way to reach customers. Google Cloud's doing well. If the stock were, if the stock had not been pushed multiple times by people who said this is the cheapest of the significant six or whatever, then this wouldn't have happened. So those who want to
the significant six, that's funny. I also don't know what he means with they didn't mention YouTube. I mean, maybe I didn't get his entire comment there, but they did disclose that they made $9.2 billion in ads from YouTube versus the 7.9 last year. He might be talking about costs. So how much do they actually net from YouTube?
5 raised versus 3 lowered, so therefore it goes higher. Not today.
I think it's Bernstein this morning calls all of this the burden of high expectations. Do you think that's what we're looking at?
Exactly. Yeah, I mean, Bernstein actually distinguished himself pretty well in some of these, and I thought that that's exactly what happened here. And those who do not, my Chappell's zones, we sold. I don't want to say a great deal of it, but it's my least favorite of the significant ones. And that was because it ran so much, and because I don't like their advertising model as much as I like Amazon's and I like Meta's. But that said, I was also worried about Google Cloud not doing well. I'm not going to suddenly abandon the thing that drove it down last time, which is Google Cloud being bad. So Bruce, fine. If you want to sell it, be my guest. It's probably going to be a mistake.
As for Microsoft, Jim, they're really slicing up the cloud revenue, looking at XAI, Azure growth,
right,
and wondering whether or not the push to AI is sort of cutting out other cloud consumption.
Well, look, I think that they handled themselves very well. They were very methodical. Once again, I want to use this ratio theory because it's really worked for me over the years. Microsoft had many, many people who loved it. We did not get a single target lowered. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 analyst firms raise price targets. Yes. They're going to be right. The sellers are going to be wrong. Amy Hood was as confident as I've heard her in many years, the CFO, who is just money. That's her, like, they should just change her name to money. And she is saying, look, everything's going well. They lowballed how much AI is going to do, and their AI, all the different iterations that they're going to do with Copilot. They're doing remarkably well. We'll speak to Lisa Su, too. They can use every single high-performance GPU chip because they have that much business. Remarkable. It's just a fantastic quarter. Again, go ahead and sell it. I want everyone out of these stocks who doesn't understand what the hell they do. I mean, especially these people who are in these ridiculous ETFs. I mean, you want to create an ETF, Carl? I'll create an ETF that'll be better than all these people because I have genuine hubris today.
Well, some of them are going away. We won't get into that part.
Yeah. I'm just saying, look, I mean, I know.
This is a reference to the long Jim and short Jim, both of those closing down.
Different animals. But the one thing that we do know, that if you wanted to have one complaint, it's that when I was out there, they were talking about how what you use the use case for is summations. And that was 3 months ago. And what did they all admit that they use it for? Summations. Like, I was hoping that they would have some new reason to use it. But what they did say was, look, we're going to hear what the customers use it for, and then we'll populate it that way.
Really quick, this is Bernstein as well. This might be a stretch, they say, but one could argue that non-AI Azure growth slowing down bodes relatively poorly for other cloud consumption companies. Is there a read-through for Amazon?
No. In Oslavsky and Jassy, they're gunning. I mean, they're taking no prisoners. The people who think that they're not going to deliver, I think, are going to be motivated to say they won't deliver without looking at the facts. I would look out for anyone who thinks that Amazon's not ready. Amazon is the one that's most affiliated with NVIDIA, and I think they have genuine use cases. I think that they've always been great at inference. The current H100 is just the king of inference. They have remember, there's a big difference. We're going to speak to Lisa. AMD does not have the training software that NVIDIA has, but it's turned out to be much faster than people thought. And Amazon needs everything, every single chip.
All right, we're going to pull off this for a moment. I want to touch a little bit more on the Tesla comp plan, and I want to hit some of the social sentiment on this. I've covered a lot of mostly just the facts around this, as I usually do. I like to just give the facts, which I want to be clear. I think the facts point very clearly to the fact that some of Elon's past stock comp will probably be reduced. That will be a benefit. It's anti-dilutive to shareholders. However, it will probably be combined with a new, longer-term stock comp plan that offers more ownership to Elon, obviously in exchange for continued growth. So it'll be very interesting. I actually think both of those will be good for Elon. And the best time for Elon to do it, to get a stock comp plan set, would be now, because the stock is at a near-term low. Easier to get to build in a double for stock comp when you're at a lower level, right? So I think that's something I'd put in front of the shareholders pretty soon. But anyway, a lot of the social sentiment is surrounding this idea that, well, hey, Tesla was say around $17 back then and pre-split, right? It's gone up. Well, actually, split adjusted is the way to look at it, and it's essentially up 1,000% since that. And maybe is that not enough compensation for shareholders? Is sort of the argument. But of course, the judicial response to that is, well, maybe, but was there enough disclosure around the plan in terms of how it was negotiated and what kind of time commitments Elon would provide? And, were shareholders aware that there was no restraint on Elon dumping, basically, this is what they're implying, $24 billion of Tesla stock and then spending a bunch of time over at, say, X, as opposed to working at Tesla? That's sort of the judge's response. It's like, hey, if you're going to get paid that much, shouldn't your almost sole priority be Tesla? That's somewhat of the judge's response. And others respond to that and say, who cares? Like, if he can run the company and do other things at the same time, let him. So I thought that was somewhat interesting. There were a lot of people that supported the judge, called them a straight thinker. A lot of others called the judge rigged, the judicial system being rigged, and some people are calling on trying to sue the judge or the person who brought the lawsuit. Neither of those things likely to go anywhere. And, some folk, here's a comment I thought was very interesting. So Musk, having blown $43 billion, about 24 of actual equity, largely of other people's money on free speech while living off paper money from Tesla, now sees an opportunity to make some money out of AI, but is having liquidity problems. If that man goes bankrupt, it wouldn't be penance enough for what he did to Twitter. Okay, so that's, one person's idea over here. A lot of people really like what he's done. So I think you've got sort of like a 50-50 conversation. Elon, of course, has been discussing the idea of moving the Tesla headquarters now to probably to Texas, where their physical headquarters is. He ran a poll with about almost 1 million votes now, 840,000 votes. 87% yes, 12.3% no. He recommends incorporating businesses in Nevada or Texas, and to never incorporate your company in the state of Delaware, which is where most companies end up incorporating. But clearly fighting back. Punish the state that punished him, so to speak. All right. What else?
Understand where there are quality opportunities. They have 12 stations in their line. I've seen them. Since the time our team has shown up, we've added over 50 inspection points just in that process alone around just this plug. A lot of learning that will require an enormous investment on our part in terms of people and engineers and interactions. We're going to do it.
Vivek calling the judge rigged is not a surprise. Like, I feel like you could have, like, a Vivek GPT, and it will always side with Trump, Elon, the institutions are rigged, fire everyone. You know, like, it'd actually be a really entertaining GPT. The Vivek GPT. Yeah. So, like, I feel like it would be one of the easiest models to train, because it just seems so obvious what Vivek is going to say. Someone here writes, yeah, because shareholders' pocketbook matters more than the company's creator pocket. Gross, someone called the judge can overturn the agreement. Well, remember that a board is responsible to shareholders in a corporation. Once you incorporate, the founder loses some of that control. That's the nature of going public. So this is why a lot of companies like staying private. Steve thinks the real estate market in China is going to be down for the next 3 to 5 years. Honestly, probably. And then argues house hack China. House hack has a really cool idea for China, but it does not involve buying real estate in China. I think the idea will blow people's minds, but we don't need to talk about that right now. Yeah. Interesting questions. Good questions. Vote with your feet, Elon. Go move the headquarters. Be a pain in the butt, I feel like, to move all the incorporating docs, but who knows? I'm sure some attorneys can figure that out. All right.
I don't think so. Was this a shot at them? Absolutely. As I say, these moments shake all of us to the bone. Boeing, our people, our customers, everybody. So our job is to just restore confidence at every level. But the reach out on the part of our customers to work constructively with us, and they've been a steady parade coming in here, it's been constructive. They want Boeing to win. They want us to succeed. They're going to learn everything there is to learn about the NTSB report and then some, and they're going to help us every step of the way. And I am going to work...
Boring. So this is interesting. Yeah, Max, you're right. New York Community Bank. Stock loses 1/3 of its value. NYCB. NYCB. Oh, wow. Oh, wow. It's down 40%. Holy smokes. New York Community Bank fell 36% on heavy volume pre-market trading when it said it would cut its dividend by more than 2/3 as the company built up capital to meet regulatory requirements as a larger bank. Okay, so more stringent regulatory requirements. That's okay. I don't know if that's necessarily a sign of stress. The bank also reported a surprise fourth quarter loss and missed revenue estimates. We recognize the important impact of the dividend reduction. Well, I mean, people are going to think they're collapsing. Okay. Well, let's just look at their actual financials. Holy smokes, 41%. New York Community Bank Investor Relations. Someone is risking bankruptcy. Yeah. Okay, here we go. Oof. Somebody says they bought a bunch of New York Bancorp yesterday. Oh, that's a bummer. Oh, I'm not moving to Texas. No. Paying dividends with house hack? Where have you been? I think we mentioned a million times that house hack, as it begins, is a growth company. And we'll reinvest every profit. We've made that very exceptionally clear in every fundraise we've done. The goal is to IPO and really get our structure set. And then, of course, there'll be dividends or stock buybacks or whatever. I actually prefer stock buybacks over dividends. I think there are different vehicles to get dividends. Like mini funds will be dividend based. So that's house hack, right? House hack is two pieces. There's the growth component of the business. And then there's the real estate component, which will be available via mini funds, probably, hopefully, knock on wood. That'll be where dividends are. But yeah, we've been very clear about that from day one. Accelerate. Okay, so what happened here? So this is New York Community Bank. Commercial loans represent 46% of total loans. I like how they say commercial loans represent 46% of total loans. But yes, we have a diversified balance sheet. Commercial 46% of commercial loans doesn't seem horribly diversified. So yeah, no worries, accountant. I know maybe you weren't watching the other times, so that's fair. This is very interesting. Dude, 40% is not diversified. No. According to certain select financially and strategic attractive assets and liabilities from Signature Bank, adding a significant amount of low-cost deposits. Okay, well, this has to do with our private bank, unveiled new... Whatever. Just show me your numbers. Let me just go to the balance sheet. You have to be so careful reading what they want you to read. I think they think that most people aren't going to scroll to the actual bottom where their balance sheet is. Oh yeah, and deposit flow would be very interesting. Deposit flow. So I can't even read this. What is this? So total retail banking. Okay, so they lost deposits. Look at that. 82 presumably billion dollars here, and they lost 1.3-ish billion dollars of deposits. They're talking about this being escrow deposits and such, but remember, SoFi is like skyrocketing in deposits. So let's see what else. Let's go look at the balance sheet. Non-performing loans out of total loans, 0.51. That's pretty low. But those could be number of loans, and you have to align that by the size of the loans, because you could have very few bad loans screw you, and a lot of small loans not even make a difference. Oh, they have 420 branches? Of course they do. Of course. Multifamily loan portfolio. Average coupon 3.85. Yeah, so if the average coupon on the multifamily loan portfolio is 3.85, you know you're upside down on those bonds. All right, give me a balance sheet here. Balance sheet. Oh my gosh, there's so much stuff. Adjustments for GAAP, adjustments, shareholder equity. You losers. Okay, I'll get to the bottom of this. We'll get to the bottom of this. This is their presentation, their slideshow. Vive it, fine, Jewel. Okay. So how about we go with SEC filings? Aha. No, they have not filed their SEC filing yet. Dang it. Fine then. Here's your press release. Okay, while that loads, this is, oh, that's just an ad. I just saw Sarah. I went to go click over, but she's not actually live right now. Okay, so here we go. Here we go. Total revenues down. Wow, quarter over quarter. That's a sequential decline there. Negative 15% compared to September 2023. Up 54% from December of 22. Okay. For the 3 months. So they had a merger. Okay, well, the merger is going to explain their growth from last year. Provision for credit losses. $552 million of credit losses compared to $62 million for the prior 3 months. The increase is attributable to higher net charge-offs, as well as weakness in the office sector and repricing risk in multifamily. There's going to be such a huge opportunity in multifamily. Like, let me be clear what we're doing with Housestock right now. Right now, we are negotiating a deal where a seller is in default on their first and has, I think, 2 or 3 loans coming due after that as second, third, and fourth loans that were basically equity refis to finance another construction project of theirs, which is way over budget, and so that's falling apart. So they stopped making payments on their Fannie Mae loan, which is a loan with like 3.1% interest. We could potentially assume that 3.1% loan, you know, cash pay off the rest, and now we have we can stabilize the property with 3% financing by essentially, you know, the owner taking a haircut and selling short on some of their other debts. And the opportunities in multifamily, that's just one project. Those opportunities are everywhere. Like, the next 2 years, I think, are going to be huge buy the dip opportunities. Frankly, probably if you underwrite correctly, more so on multifamily. Like, I think we could still do single family wedges all day long. But there are some really good distress deals coming in multifamily, and it's very, very exciting. So for 3% financing onto anything today is awesome. Yeah, I agree. How could multifamily be cut in half and single family prices not change at all? And it doesn't have to do with the prices. What you do is you underwrite that kind of discount up front, right? So what you have to do is you have to look at the rents. You look at the rents they're getting. You have to discount the rents they're getting, and then you have to say, is this still a good deal with discounted rents? If I have to drop the rents to fill the units, is it still a good deal? In the event that it is, those are the deals that you want to strike on. So you're already building a lower rents into the pricing, and so what you're paying is already factoring in rent decline, which is important. Okay, so let's keep looking at this bank situation here. So, no, I don't like to renovate multifamily. I like to get good deals on multifamily units that are in distress, debt distress. I didn't say condition distress, debt distress. Net charge-offs total 185 for the 3 months ending December 31. That's a lot bigger compared with 24 mil in the prior. I mean, these write-offs in Q4 are huge. I mean, you're talking about almost a 10x increase in write-offs in December for multifamily and office, and an increase of what, 8x on charge-offs over here. Wow, that's crazy. Fourth quarter net charge-offs were primarily related. What did I say? They're trying to trick you on the oh, well, most of our loans are good. I'm like, bro, it doesn't matter the amount of the loans, like the physical quantity of loans. It matters the value of each of the loans. I literally said you could have a few big loans go bad, and it'd be worse than thousands of small loans going bad. I literally said that. And look at this. Fourth quarter net charge-off was primarily related to 2 loans. One co-op loan with a unique feature that pre-funded CapEx. Although the borrower was not in default, the loan was transferred to held for sale during the fourth quarter. Right, so then they had to take the market adjustment. We expect the loan to be sold in the first quarter. Oh, so you actually are going to take the big loss then. Second, additional charge-off in an office loan that went non-accrual during the third quarter based on an updated valuation. Given the impact of recent credit deterioration with the office portfolio, we determined it to be... I'm telling you, man. Telling you. A few bad loans at a bank can bankrupt the company. It doesn't take many. Think about it. You think it's the The SoFi $50,000 personal loan, the $10,000, $20,000 personal loan. Nope. It's those big commercial ones that screw you. Wow. Provision for credit losses were $833 million compared to the $133 million last year. 130, only 132 of that is based on the signature loan portfolio they picked up. So in other words, 833 minus 132, 701 billion due to their own underwriting. Oh no. Okay, so how much? So their revenues are down 15%. Year over year, they're up because of a merger. So that doesn't even really count. Then we have, so revenues are down. Assets. Let's look at their assets. Available for sale. These have to be listed at market value. So we've got about $20 billion here of cash and available for sale. Near term. Those are your, okay. Then we have loans available for sale as well over here. Loans held for investment. So these are not liquid and probably not adjusted for fair market value. Okay, got it. Federal Home Loan Bank. Okay, stock though. That's ownership in the Federal Home Loan Bank. That's fine. Deposits. 30 bill of deposits. Actually more. Total deposits are about $81 billion. This is a pretty nicely sized bank. Wholesale borrowings, 20 bill. Total liabilities, 100. Okay, well, frankly, this wholesale borrowings here at 21 of borrowed funds outside of deposits, that's not that big of a deal. We've got, but the cash and available for sale they have is 20. So basically, oh, well, that is interesting. Basically, all of the cash and available for sale securities they have equals their wholesale borrowings. So if they didn't have, if they paid off their wholesale line of credit, they'd have zero cash. Now they have $80 billion of deposits, but they're losing, I mean, their outflows were what, negative, let me see what their deposit flow was. We have to go back to their deposit flow. Because I'm pretty sure they just lost $2 billion in outflows. And then I know we've got the bell coming up here. Oh, I really want their sheet. Where's their slide deck? Their website kind of sucks. Let's see here. Slide. Nope. Oh, wait. I have it right there. Duh. Oh, what? Nope. Never mind. That's their thank you. Dang it. Okay, hold on. I'll just go to history and find it really quick. This is very interesting. And I don't love it. There we go. Deposit flows. And then we'll hit the bell. Flow. Flows, flows, flows. Deposit flows, flows. Here we go. This is right here. Deposit flow analysis. This is like the most rigged chart ever, by the way. Who does a chart like this? Look at how they've literally what they're trying to do is make it seem like, look how tall our deposit chart is relative to the outflows. Small little lines over here. This is ridiculous. Yeah, okay, we got 40 seconds to the bell here. But anyway, we need to total this together here. And we'll do that after the bell. But, rip.
Not as bad as you think when you dumped our stock, and we're going to get better, not necessarily instantly. The problems here, just so people understand, are twofold. China and Luxman Narasimhan basically saying, listen, China, it's the economy, and there's a lot of companies that are selling cheaper coffee, and they're having a little inroads right now, but the high end's doing well. And then the United States, the problem was a misguided attempt by pro-Palestinian people to link Starbucks to Middle East issues that was probably a specious move. And that caused the occasional drinker in the afternoon to pull back. I know January wasn't that strong, but I know that Luxman is assuring us that the long term is good, which is why the stock's having a very good run, because the brand is good, the products are good, the gross margin is good, the execution is superb, and I believe, my Capital Trust owns it, we've been buying the stock, that it will come back.
That's pretty 50-50 there. Pretty 50-50. Okay, good. So See how it actually moves. So New York Community Bank down about 43% here. That's the one we've been analyzing. Tesla's trying to green candlestick at the open. I really think this is good for Tesla shareholders. It's bad for Elon, but we'll see what institutions end up thinking. And again, I'm not here saying it's good that it's bad for Elon. It's not like I want Elon to be punished. I'm just saying, like, the fact of the matter is, I think it's good for Elon, or good for Tesla shareholders and bad for Elon. Starbucks up 4%. Novo Nordisk go away. There we go. Sitting up about 4%. Mastercard, which reported earnings this morning, up 1. Zim's almost at $15. Costco at $7.02. My goodness. You've got New York Community Bank dropping more, down to 46% right now. You've got Alphabet down 5.3. Oh, Tesla's turning red here. Here comes the red candlestick. So we'll see how it moves. AMD down 4. You've got a support line right around here at 164, right about where it is. We'll see how that moves. Obviously, Fed Day today, big deal. Nvidia's trying to recover here with some green candlesticks. Okay, let's go. Tesla's about to turn that red candlestick green. No. Okay, we'll just look. Oh, there it is. We'll look away though. And then this is New York Community Bank down now 45%. Let's take a moment here and just look at their flows. So anyway, rigged flow chart. I hate that. They try to rig this. The more complicated they make these charts, the more nervous I get that there's some rigging going on. Look at this. So what were the actual flows here? Well, easy. Negative 2813, 1767, plus 1401, 1230, 639. Okay, they had outflows of $1.3 billion. So I wonder how much they can actually sustain of that. They have the cash. So really, as long as you don't get in it. But the problem, okay, here's the problem now. Oh my gosh, I forgot. I didn't even consider this. Oh man, that's really bad. Okay. So here's what happens. When even though deposit outflows are, $1.3 billion, which are potentially sustainable, the danger is when news hits everywhere that this bank stock is down 40%, the people who have their deposits with this chart, it just halted. Just hit a halt. The people who have their deposits with this company potentially say, whoa, the stock's down 40%. Wait a minute. That could lead to some deposit outflows. That could lead to a liquidity crisis at the bank. Time for me to get my money out. Yikes. Oh, circuit breakers. Who remembers that from COVID? That was scary. During COVID, that was such a crazy time. Yeah, halt means no one can buy or sell. That's correct. Yeah. Wow. This stock collapse right here by New York Community Bank, honestly, it increases the odds of a Fed rate cut in March because they're going to end the bank term funding program on March 11th. No more loans. This is the type of bank that needs the bank term funding program. And it's now down 40%. There's no way, man. This is bad. New York Community Bank basically reported a lot more losses and charge-offs than the market expected, signaling a potential liquidity issue, which led the bank now to be down, 40% or whatever. Yep, fiat clown world. Yes, that's correct. It is a fiat clown world. I don't think the fiat clown world will end anytime soon, but that's why I'm a big fan of ownership in companies and real estate. Those two assets, ultimately, I don't really care what the denomination is that they're traded in. Okay, so we'll see what happens as that circuit breaker unfreezes. But Rockwell Automation, bro, what happened to them? Let's find out really quick. Rockwell Automation. Okay, so let's see here. We have Rockwell Automation. Sales slightly missed the forecast. It's actually not that bad of a miss. You've got, let me write that down. Rockwell Automation. Okay, so Rockwell Automation, negative free cash flow. Well, hold on a sec. Oh, wow, yeah, their free cash flow. Free cash flow, negative 35.3 million. The estimate was 356.5 million to the positive side. Wow. Okay, so something happened there. And then Q1 sales came in at 2.05 billion versus the 2.1 billion expected. And then EPS missed as well. Q1 EPS comes in at 2.04 versus 2.66 expected. Okay, interesting. Yikes, it's a big hit. I want to see what they're saying, though, about this New York community bank. We know it's halted. I'll write this down, too. New York Community Bank. Let's see. Oh, yeah, they cut the dividend. Right, right. That's a signal as well of cash problems. Cut dividend. Stock down over 40%. Let's see here. Trying to get some comparisons here. Net interest income was 740 mil. Net interest income, NII, versus the estimate of 791.8 mil. Yeah, there it is. Q4 provision for credit losses. 552 mil versus 45 mil estimate. And then a lot of that, much of that from 2 commercial loans that New York Community Bank underwrote that are either non-performing. No, neither of them are actually non-performing. They're just trying to sell them. That they are moving to held for sale. That implies, I'm going to make that a sort of little opinion piece, but that basically implies they need to raise cash. They have roughly 20 bill on a wholesale line of credit and 20 bill in near-term cash and short-term securities. So basically fully debted there, right? And then, deposit outflows with stock down 40%, deposit outflows, risk a new banking crisis for a bank with over 80 billion in deposits. Simple. It's simple. So, in my opinion, that actually, that says, with Bank Term Funding Program closing March 11th, the bailout machine will be gone. And Fed probably needs to cut to avoid another banking crisis. Fed probably. All right, done. Put that little update there on eHack since it's a nice little summary. Boom. Okay, so let's go to. I want to see what yields are doing, but watch that bank. Whoa, the 10-year yield just dropped 10 bips. 2 years down 13. Halt's gone. There it is. It's actually trying to rise. People speculating on that one. Boy, Okay, we'll watch that one. Rockwell 14.6, Apple's down 1%, Nvidia down 1.68. Tesla's actually trying to go up. Again, like, I think if you're an institution and you're looking for a buy the dip on Tesla, this is it. You have anti-dilutive support now. But then again, I don't know. I don't think Elon's going to go lose his poops. There's still a lot of money there available for Elon to make. MasterCard 2.6, Novo Nordisk coming down from their 4% high a little bit. Boeing's up 3. AMD, ooh, dropping below that support there. Not so great. Google, wow, look at the anchor of Google. My wish for my birthday is to invest more into house hack. Oh, Daisy, crazy. When's your birthday? Is that advice, Kevin? It's not personal advice, nor is it paid advice. How about that? Yeah, we are probably going to do we're probably going to call warrants for house hack within the next couple weeks here. And like we're thinking in February. And then we might do the a short Q1 fundraise for house hack, mostly because of how many multifamily opportunities there are right now. Like the default opportunities are insane. So we're very excited about that. What's wrong with SoFi? No, I don't think SoFi's down on this news. I think SoFi is down on momentum. Because remember, SoFi is a momentum trade heavily. I'm not trying to diss the stock. I'm just saying it's a very heavily retail traded stock, okay? It moves in extremes. So does Tesla, okay? So it's not like it's a diss. I'm just saying, like after it rallies, 15%, like it usually gives that back. It frequently does this cycle. So, I don't know that SoFi is down 2% because of New York Bancorp. I'm not sure about that. TMF rocket ship. Well, yeah, I mean, the 10 year's down 10 bips, man. The TMF is triple leverage. 3% rocket ship. But yeah, I mean, when you zoom in, that's what it looks like. The grind never stops. It doesn't, man. You got any use for fire shows? I can make a dope vid. That's kind of cool. No, but not right now, but thank you. Alphabet Ventures has an investment in Neuralink. Oh, that's cool. I didn't know that. I have a mortgage due on my first time home, Jan 2025. How much down payment should we have on 800K? We have easily half her. I mean, I like putting down as little as possible on 30-year fixed rate financing. It's a great loan. But then again, it's very expensive now, so it kind of makes sense to put more money down because of the what's it called? Because of rates. It's insane right now. So short SoFi. No. Yeah. Oh, Christian. I got invited to order my Cybertruck and my wife is sitting next to me. Please convince her. You got to pull the trigger when FSD comes out for the Cybertruck. Ow. See, I got punished for saying that. I shattered my phone yesterday and then I cut myself on the glass. And it's like a paper cut. It's nasty. But yeah, I'm like, why is the Cybertruck out without FSD? Like I can't be in a Tesla without FSD. So like I'm looking at it and they're like, hey, you want a Cybertruck? I'm like, no, I want FSD. Yeah, instant karma, exactly. Sorry. But you get FSD, I think it's a fantastic car. So I do also think it's a tank. Like it's probably the safest tank you could put your children in if you have children, or yourself. So I do think safety is massive. I think the practicality is fantastic. I just can't touch it until it has FSD. So I got to be real about it. You know, for me, I'm like, I'll put my order on hold until I get FSD. You have firearms, Ken. Oh, you all should see the gift. Yesterday, the House Hack team bought me a gift, and they custom made something. Thanks, Kevin. We just placed the order. Let's go. That's awesome. No, go on. Good for you guys. Tesla up. Tesla up. Let's go. What do we got here? What up, dude? Morning. What are you up to?
Well, so I woke up early because I wanted to do one level of Plants vs. Zombies because it's a mini game level.
Which one? Is it the nighttime minigame?
It's a nighttime mini game, and I got to the Yeti, and the mini game is the Yeti. So I woke up early and I saw the camera and I was like, and then I got my toothbrush and I was like, to the camera.
Really?
Yeah.
Okay.
I wanted to prove to Mom that I was brushing my teeth.
Prove to Mommy brush. That's awesome, man.
And then I brushed my teeth, and then I came here because I heard you, and then.
Was I loud again?
Well, usually it's only if your door's open or your first, or your second door is open.
Yep. I didn't close any of them. Check this out, Jack. Look at this. This is a bank right here, the mountains of a bank. And what do you see happening there on the mountains of the bank?
It's going down.
It's going down. Why would a bank have the mountains go down?
I don't know. I don't really get that. Bank is going down.
You don't get how a bank is going to. What would you say if you had money at a bank? Like, let's say you had $100 and you gave it to the bank, okay?
To like keep it safe.
To keep it safe, exactly, right. And then you heard that the bank was maybe starting to have money problems.
What's that mean?
Like, they're running out of money,
Like to safe for people.
potentially. How would that make you feel about your $100?
Sad.
Sad. Yeah, exactly. Well, there might be a chance that it'd be harder to get your $100 back, huh? If the bank goes bye-bye. Do you know what it means when a bank or a company go bye-bye? Like when they run out of money? Bankrupt. That's right. Can you guess now where that word came from? Bank. Exactly. Bank runs out of money. Yep. Yep. Anyway, so Jerome Powell speaks today. Do you remember Jerome Powell?
No.
How about for Halloween?
Oh yeah.
What can you tell the microphone what Jerome Powell did?
He threw $2 bills everywhere.
He gave away money. Yeah. Yep, that's what we did for Halloween. Anyway, all right. Good luck with this bank. It's time to push this button.
Just close the fucking door. Close the door.
Oh, this one. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Oh, Jack, do you know Elon Musk?
Yeah.
Like the Tesla guy, right? Is that him right there?
He has SpaceX too.
SpaceX too, that's right. A judge, basically went to Elon and said, hey, all the money you were promised for pay between 2018 and now at Tesla is bye-bye. What do you think about that?
Wait, so he lost all his money between 2018 and now?
From Tesla, yeah, until they come up with a new plan. The judge said, bye-bye, they took it away.
Why?
because they said that the judge said the shareholders, so the people who are part owners in the company, weren't given enough disclosures about the details, which is basically a fancy way of saying a judge thinks people didn't know enough of the details around how much money he would get paid. Do you know how much money it was?
Like, I would say, I don't want to be too high or too low.
Okay.
But
Talk this way if you can.
I would guess, like 10 billion.
10 billion. That's an incredible guess, actually. It's 55 billion is how much he was paid. So the fact that you're even in the billions is fantastic. High five, man. That was really good. Yeah, and so the judge took that away. So now they'll have to come up with a new plan, huh?
But does he still have his money from the other companies?
Yes. All right. Thank you, everybody, for being here. We'll see you in the next one. Bye.
Bye.